So a little stock update on Tapestry, ticker symbol TPR. We have an earnings call tomorrow, April 30th at 8:30 a.m. And you can kind of see based off of the stock price, it seems like this new high, at least since the crash, is in anticipation of a good earnings call. Now, what does a good earnings call actually mean in this kind of situation? Well, we have 10 analysts here, and they have an earnings per share forecast of a loss of 6 cents. So to kind of beat that might be hard, but people are expecting, even if there's a negative earnings per share, presumably they're expecting things to be looking better than people had anticipated for Coach. Now, if we look at their sales, we can see the total for 2019 over here on the right is $6 billion. A vast majority of Tapestry sales is from Coach at $4.2 billion. The majority of that is North America, and we mentioned in 2008 on the last crash, this number kind of stayed very similar. There's a little bit of a dip, but not much. And in fact, they really, Tapestry or Coach has really not grown the customer base in North America for Coach. It's kind of stayed at this level. Most of the growth has come from Greater China, and we can see now it's $780 million roughly. And in 2017, at the bottom in the same column, we can see it's $656 million. And so you have kind of like 110-20 million growth there. And you can see that makes up a very large portion of the growth of Coach. So, the way Greater China seems to be going, is it going to grow? Is it going to shrink, stay the same? That will have a major effect on Coach. Because like I said, North America was stable on the last market decline. So what's going to happen here in terms of Greater China, which is a newer market? Now we have this interesting article here about Alibaba's Tmall. They have a new outlet business. And this article mentions that Coach was one of the first brands to join this channel. So very proactive. They're offering 70% off their products. Now, on one hand, this looks bad to me. Why? Because it means Coach is kind of telegraphing they're possibly a cheaper leather goods company. So instead of a $790 bag, we're talking about $237. People might expect these sales. They might be reluctant to pay, $500-$600 for a regular sale, let alone a regular retail price. So on one hand, this kind of looks scary to me. On the other hand, maybe people just know that this is a crazy sale specifically because of what's going on with the whole world in terms of the whole situation being crazy, and people might know this is kind of a one-time event. So it might not be as big of a deal as I consider it. They are looking at this in an interesting way. They're looking at it as strategic cooperation with Tmall in terms of going to Chinese consumers, showing them the brand of Coach products, kind of getting new customers. I think this is the way they're looking at it. And the way they're looking at it, I think, is they have to sell their inventory, which we'll talk about in a second, and instead of selling it for cheap to people who are already customers, I think they're going to Tmall specifically to try and get new customers, right? They have their own e-commerce channel that they could be selling Coach stuff on. Maybe there's a sale there as well, but nevertheless, they're focusing, I think, on Tmall to get new customers. And so that's actually a pretty smart decision to try and take this kind of negative situation, at least make some positives out of it. Now, why do I say they have to get rid of inventory? Well, we see they have purchase obligations for almost $500 million. And we mentioned before, maybe there's some way they can get out of this. Well, maybe there is, maybe there isn't, but nevertheless, they're trying to do what they can to lower their inventory, which has been steadily increasing. Now, some of this is 2018 was Kate Spade purchase, and so they're just taking inventory from Kate Spade. But nevertheless, we're talking about, $750 million worth of inventory, on top of that possibly another $400 million of inventory. And so presumably they want to liquidate it to try and protect themselves, bring in some cash. And even though we mentioned that they're very cash positive, this makes sense. I think it's a good idea, and they're trying to turn it into a positive and get new customers. If we look at Louis Vuitton, they see mainland China picking up steam sales, and specifically on the online business, which makes sense, and Tmall will probably be a great avenue for that. They mentioned that they're at unheard of levels for Louis Vuitton, which is pretty interesting. Their earnings call was April 16th, and their new financials presumably was on April 16th. And you can see there was quite a large growth in terms of the stock price afterwards, although, once again, very key to note the volatility, and it came back down, went back up. I think that's very possible to expect that here too. Now, here's a very interesting article. They also mention the growth rates, sometimes excess 50% for some of these brands. people going back to their previous patterns. So similar positive kind of outlook on China consumer buying. But nevertheless, what they really mentioned, which I thought was really interesting, is in terms of Chinese consumers, really it's only 1/3 to maybe half of their luxury is at home in mainland China. Really, they like to go outside of mainland China in terms of tourism, whether that's because of price benefits or what I found interesting is the symbolic value of buying European luxury goods in the continent's fashion capital. So when you go to France, you're buying a Louis Vuitton bag or whatever it might be, Coach in England, or the point is that people like to do these things as a tourist. It's fun, it's part of the experience, and maybe they're getting a better price, or maybe that's just part of the experience. And so these companies are going to really lose out on that. And so the question is, how much of that $2.4 billion that Coach gets from North America, how much is that from Chinese consumers, which would be a really interesting question. Obviously, we don't have the data on that. And they mentioned that, as much as we're seeing this mainland China buying picking up, but some of these companies are going to have to double to triple to make up for lost revenue. So as much as we see this growth in China, don't necessarily think that that's all going to be, perfect and positive news. And they also mentioned another interesting thing, that Chinese luxury shoppers are younger and they're first-time buyers, so they're going to show off their wealth, whereas Western luxury consumers tend to be older and repeat purchasers. They don't have to buy the new bag. They already have some bags, and so they'll have less incentive to spend. They're going to be more careful with their money. But nevertheless, as we pointed out last time in 2008, people had continued to purchase even in the economic fall over there. So will that be the same here? I don't know. This is more intense, I think, compared to 2008. Although my wife did point out that people are stuck at home. Maybe people with a lot of money, they're usually spend it on, events and going out and having fun at all these different, parties or whatever it might be. Restaurants, and so people have possibly more money sitting around at home and they want to feel good. They want to possibly buy some shoes or a purse online, and that's one of their ways of doing something exciting while stuck at home. It's interesting. I don't know. I wish I had that type of problem. Nevertheless, so we can kind of see the pros and the cons, the positives and the negatives going on here. Also, in terms of Louis Vuitton, they mentioned their worst declines were in watches, jewelry, other kind of select areas, whereas in terms of leather goods, they were only down 9%, which is pretty good because it looks like Tapestry, that is a major focus. Of course, they do have all these other areas, but it seems like the bags take up more of the inventory. Nevertheless, what's going to happen to the stock? I don't know. It's always hard to tell these types of things. I'm not a day trader, and definitely do not depend on this for financial advice. This is entertainment only. Nevertheless, I expect that the earnings call is probably going to go well. There might be a uptick in terms of the stock price, but there's a lot of volatility in the stock market. I wouldn't be surprised if we see things go down. We had a pretty good time in terms of timing the stock market. The video last time was around April 1st, so that, if you look at the chart here, was pretty much the low point for the stock price. As I mentioned, that I was going to load up a little bit, a very small amount, and I thought it would go down lower. I was wrong about it going down lower. I mean, I don't think we'll see. We'll see once there's a recovery entirely. But nevertheless, so if you followed my, once again, not advice, just entertainment, there was a good opportunity to buy then. It's been in the positive since then. Will I add more of my position right now? No. I got a good time. I don't have to be greedy here. I think it will go up a little bit more, but like I said, volatility might come back down. If we come back to April 1st kind of price levels, it'll be the same kind of approach that I had before, which is, once again, not advice, but me personally, to slowly add more position. And, as I mentioned in one of my previous videos, I think a lot of the positive news is being priced into the stock market right now, and some bad news, even if it's not going to be medically bad news, but just economic bad news. There's so many things that are still reverberating in terms of unemployment, oil, and all these different areas. I think that type of bad news could take another dip in the stock market. Maybe it won't be as big as the previous dip, but I think it's very possible. And so, from my perspective, I'm not going to add to a position, especially one that I think is doing so well. Nevertheless, you're very welcome to, because once again, like I mentioned last time, I think that the stock is underpriced. Watch my video from last time to really get an idea as to why. And I think it will be going up, and especially in the long term. So, it depends how much do you want to time the market. My only fear here is that it is a little bit of a gamble, this type of stock purchase, just because it's a luxury good. I personally think that it'll take a longer time for the stock to rebound, although what can I say? It's obviously rebounding quite a bit right now. So it's really hard to time these things. We got good timing. I could respect someone who wants to buy more. I'd love to hear if you are. And I could also respect my position, which is going to be, if I don't get this stock, well, there'll be other stocks as well that are doing that haven't rebounded yet, like JP Morgan that we did a video on, or we'll talk about Wells Fargo soon. Nevertheless, I would love to know if you kind of like these small update videos or more of the deeper dive into stock analytics. Let me know, and we'll see what happens with the stock call, with the earnings call tomorrow.